Despite the effectiveness of this profitable indicator, it is not widely known or used by new traders. Instead, the indicator is very popular among experienced traders. This is because the indicator is perfect for spotting potential tops and bottoms in the market. The indicator is also commonly used for finding the point at which the trend switches, making it great to use for identifying reversals. The indicator we are talking about is the Fisher Transform indicator. The indicator was created by John Ehlers, a well-known technical analyst and mathematician who has written multiple books related to day trading and maths. Ehlers designed the Fisher Transform indicator to address some of the limitations of other indicators, such as the RSI or MACD, that can be affected by noisy or choppy market conditions. In today's video, we will be showing you exactly how the indicator can be used to enter into profitable positions. Now that we have gotten that out of the way, let's start. Head over to the Indicator Search tab and search for the Fisher Transform indicator. Select the indicator made by Tradingview and add it to the chart. Now let's change the indicator settings. Navigate to the Indicator Settings tab and click on the Style tab. Here we will be removing the gray lines. That was all that we needed to do. Now let's take a look at how the indicator works. The indicator works by transforming non-Gaussian or irregular price data into a more Gaussian or normal distribution. In simpler terms, imagine that you are trying to identify patterns or trends in a graph of stock prices. Sometimes, the movements of the stock price may be choppy or irregular, making it difficult to see clear trends or turning points. The Fisher Transform indicator smooths out these movements and helps to identify key points in the data. As you can see here, the price action is very choppy and ranging. This makes it hard to spot the times when the price is making highs or lows. However, if we take a look at the Fisher Transform indicator, we can see clear movements, making it easier to know what direction the price action is moving in. This is the essence of the Fisher Transform indicator, normalizing the price action and making it easier for us to read. Now that we understand how the indicator works, let's take a look at how we can read the indicator. If we take a closer look at the Fisher Transform indicator, we can see that it consists of 2 lines and 3 levels. The first blue line is the Fisher line. This line shows us the value of the Fisher Transform. The second orange line is the signal line, also known as the trigger line. This is a moving average of the Fisher Transform's value. The signal line moves a bit slower than the Fisher line. This makes it so that when the Fisher and signal lines cross, it can be interpreted as a trade signal. The 3 dashed red lines represent certain levels to determine whether the value of the indicator is high or low. An extremely high or low reading indicates that there is a higher possibility for a reversal to take place. Now that we understand exactly how the indicator can be read, let's take a look at the different methods of using the indicator. But before that, if you are looking for a crypto exchange that currently has some of the lowest fees when it comes to futures and spot trading and up to a $30,000 bonus, then check out the link in the description of the video to get access to all of these perks. The most simple way of reading the indicator is by looking at the values. If the value of the Fisher Transform is extremely high or low, it indicates that there is a high chance of a reversal. As you can see here, the value was very high after the price action made a large bullish rally. The high value on the Fisher Transform shows us that there is a large chance of a downtrend occurring. Despite this being the easiest and most simple way of reading the indicator, it's actually not that accurate, so let's now take a look at some powerful ways of reading the indicator. One of these methods of reading the indicator involves utilizing the crossovers of the trigger and Fisher Transform lines. If the Fisher Transform line crosses below the signal line while also being above the 1.5 level, it shows us that there is a high possibility of a bearish reversal. However, if the Fisher Transform line crosses above the signal line while also being below the 1.5 level, it shows us that a bullish reversal is likely. But as you can see here, there are still quite a few false signals that are provided. A more powerful way of using the indicator involves looking at differences between the indicator and the price action. This means that we will be looking for divergences between the Fisher Transform and the price. If we see that the price is making higher highs, while the Fisher Transform is making lower highs, this shows us that a bearish reversal is likely. The opposite is true when the price is making lower lows, while the Fisher Transform is making higher lows. This indicates that there is a high chance of the price making a bullish reversal. The final method we will be looking at for reading the Fisher transform indicator involves using it in conjunction with other indicators. One of the most popular combinations is to use the indicator alongside two exponential moving averages. So let's add these two EMAs to the chart. Head over to the Indicator Search tab and search for the exponential moving average indicator. Select the indicator made by Tradingview, make sure to double-click it so that you add two to the chart. Now let's change the indicator settings. Click on the indicator settings icon and navigate to the Inputs tab. We will be changing the length of the EMA to 21. Now click on the Style tab. We will be changing the color of the indicator to make it easier to see. We will do the same for the other EMA, however this time we will be changing the value to 9. Keep in mind that you can use different values depending on if you are scalping, day trading, or swing trading. We can see here that both the EMAs and the Fisher transform made a bearish crossover. This gives us an extra confirmation showing us that there is a very high chance of the bearish reversal actually occurring. With this example, we can also see that many false signals were avoided. However, when both the EMAs and the Fisher transform made a crossover at around the same time, the actual reversal took place. Now that we know how the indicator works, along with all of the methods that can be used to read the indicator, let's take a look at some entries that can be made with the indicator. Here we can see that the price has been in a large downtrend. We can see that there was a small pullback here. Despite this, the price continued in the downward direction. However, if we take a look at the Fisher transform indicator, we can see that even though the price is making lower lows, the Fisher transform line is making higher lows. This means that a bullish divergence is playing out. If we take a closer look at the Fisher transform, we can also see that a bullish crossover occurred because of the Fisher line crossing above the signal line. Finally, if we take a look at the price action again, we can see that a small consolidation previously occurred at this price level. All of these signals indicate that it's a good idea to enter into a position, so let's enter into a buy position here. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a recent swing high, targeting at least a 1.5 times risk to reward ratio. Now let's see how the trade plays out. For this example, we will also be using the 9 and 21 period EMAs. Here we can see that a large uptrend was playing out. If we take a look at the Fisher transform indicator, we can see that the value was extremely high, showing us that the trend may be due for a reversal. Along with this, if we compare the Fisher transform lines with the price action, we can see that a bearish divergence took place. This is because the price was making higher highs, while the Fisher transform was making lower highs. Finally, we can also see that the EMAs are very close to making a bearish crossover, so let's wait for this crossover to occur. As you can see, the crossover occurred here, so let's enter into the position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a recent swing low, aiming for a risk to reward ratio of at least 1.5. Now let's see how the trade plays out. As you can see, the indicator is extremely versatile and can be used in many different ways to enter into profitable positions. I hope you enjoyed the video. If you did, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.